My name is Stuart Barron. I'm National Director of Research for Cushman Wakefield, and I'm here today at 33 Yonge Street to talk to you about the Q4 2012 GTA market stats. The last time we spoke, the global economies were turning for the worse, and the U.S. economic recovery looked like it was in jeopardy. From a good news perspective, the Canadian markets were extraordinarily tight, with central area vacancy around 5.0%. And Toronto was even tighter. Downtown Toronto actually had a vacancy rate in Class A of 4.0%. And some of the nodes like GTA Downtown Fringe North Market were as low as 2.1%. The reality is that with the changing global economic conditions, what we were expecting is softer demand. And absorption over the quarter in downtown Toronto was 80,000 square feet. Now that compares to about 225,000 square feet each quarter in the 2 years that preceded that. So really we saw a substantial reduction in demand strength to about 1/3 of what we have been seeing in the recent past. Now, what we can expect over the near term is fairly good news. Down in the U.S., because of the implementation of QE3 and because of the avoidance of the fiscal cliff, what we're expecting, based on what I've been reading, is that the U.S. economy is going to recover in the latter half of 2013 and substantially into 2014. And the office markets in downtown Toronto are going to ride that curve. So what we're likely to see is continued weak absorption or weak demand over the next 2 quarters, floating around 0 or slightly positive or slightly negative. But into the latter half of 2013, we're going to see some buildup in momentum. And this is going to increase even further in 2014. With the new developments coming, and we just had another one announced at 134 Peter, 3.6 million square feet on the rise. There's a lot of confidence in the future of downtown Toronto from asset managers, and we believe that we're going to see a substantial recovery, but beginning in the 3rd and 4th quarters of 2013. Now over to the suburban markets. And what's interesting about the suburban markets is that if you take a look at the last 4 years, overall demand strength in the suburbs has been virtually nil. That means that the change in occupied space has actually been negative. And that's a remarkable stat. We've never seen it before in the history of the Greater Toronto Area office leasing markets. Most of the activity in the suburbs has been driven by the need to densify and the need to consolidate multiple premises operations, and that is often leading to contractions in the suburban markets. So we're seeing a lot of displacement of space. What can we expect in the future? Over the near term, more of the same. It's likely we're not going to see a pronounced increase in demand strength in the suburban markets over the next couple of quarters, but because of the pickup in the U.S. economy and the balance of the year, we do expect that to have a strong impact on the momentum in the suburban markets as well. So expect a pickup in the later 2013, and that should gain some momentum into 2014 as well. Those are my comments for today. I'm Stuart Barron, National Director of Research for Cushman Wakefield. Thank you for joining me for Cushman Wakefield's Market Watch.